Hello and welcome. CEOs face a tough time at all times, but things could get a little more different and perhaps more complicated with developments like Russia's occupation of Crimea. Now, does that matter? Well, let's find out from Jonathan Spector, President and Chief Executive Officer of the Conference Board, the most widely cited private source of business intelligence. John, thank you very much for speaking with us.
It's a pleasure.
So, the idea is not to pin what's happening in the Crimean Peninsula on you and ask you for a question, but it is a time of uncertainty for CEOs around the world and for a wide variety of reasons. So what are the kind of issues that CEOs of large corporations are grappling with today?
Right. Well, I think that the situation in the Ukraine is, as you say, a very specific example. But it's not the first of one or two. It's been going on for a long time and will continue to. The economy is incredibly globally interconnected today, and the flow of information is so fast and available that CEOs of global companies, wherever they're based, have a pretty good sense of the pulse of what's going on. Not that anyone would have predicted what happened in the Ukraine a month ago, but as soon as it happens, the information flow is very good. So companies have to get good at dealing with specific eruptions of geopolitical problems or financial crises and so forth. And I think over the last 5 or 6 years, they have gotten better at it. Some of our research data shows that. We've just completed a survey of 1,000 CEOs around the world. And we asked them to say, what keeps you awake at night? 2 years ago and 3 years ago, they put geopolitical risk near the top of their list. It was ranked third, I think. Then last year it was ranked fifth.
And what was the trigger for that?
Well, I think if we all forget so quickly. 24 months, 36 months ago was so long ago by current standards. But if you remember the environment 36 months ago, the Arab Spring, I think you had, from an economic or financial point of view, the crisis in Europe was much more pronounced. You had the question about the bank's solidity. In the U.S., you had enormous questions about the budget and the sequester. Not that those questions have been precisely resolved, but they were considered much more critical 2 or 3 years ago. Now, CEOs rank global political risk 6th on the list. Okay. Still important, but we've adapted to the environment. We've seen companies improve their planning processes, of course, every year their information about different parts of the world gets better and better.
So what's the first two?
The top two are, human capital, customer relationships. Those are the top two. And those are we view that as a very positive sign. Those are very kind of, they're focused on creating value. They're offensive. They're focused on creating new things rather than being defensive like.
And they're also intrinsic to the company and the business.
Exactly, as opposed to government regulation and political and economic risk, which were much higher rated concerns and were actually the #1 concern in the US 3 years ago was government regulation. What a terrible constraint on an economy to say that CEOs were most worried about that.
In America?
In the United States, and that was 3 years ago. So today it's much more focused on creating, as it is everywhere in the world, it's much more focused on creating value. And we see that as a very good leading indicator of sort of increased economic growth, slowly increased economic growth over the next few years.
Right, and why is human capital ranking so highly? I mean, not that it shouldn't, but why is it ranking so highly?
I think it's, I think 20 years ago, I think most leading corporations around the world sort of discovered the notion or began to believe the notion that, our most important assets are our people. And I think in the beginning, leaders said that, but they didn't totally mean it. And I think over the last 20 years, as companies have gotten more and more and more sophisticated about talent management and strategic workforce planning and trying to understand the educational system and the gaps and so forth that they need, the CEOs for the most part have come to deeply believe it. They see the challenges of recruiting entry-level workers at the front line. I know that's the prior guest you had was talking about the need for that in India. We have exactly the same need in the US. We've talked to CEOs around the world. It's the same everywhere around the world. But CEOs also see the challenges in the C-suite and at the senior, in the senior management ranks, and trying to create enough people who have great leadership skills and the ability to lead corporations is always a challenge. And so I just think over the last 20 years, business has evolved to really understand how critically important, in the same way perhaps that that we've understood that IT is so critical to corporate success. I think we've understood the same thing about talent.
And you said customer relations was the second one. And is that because companies are losing customers faster?
No, I think it's because it's for different reasons in different industries. But I think broadly speaking, it's because the nature of the relationship between a company and its customers has become much more complicated in the current era with technology, and in particular with social media. And so, if you imagine, what a customer meant 25 years ago, and now you think about companies who are, for example, in the U.S., a major event is the Super Bowl. It's our football championship. This year and last year also, a number of the companies showed commercials on the Super Bowl that were produced by their customers. Right? Imagine the idea, how foreign that would have been 10 or 15 years ago, that your customers would produce your commercials for your product. And many companies now work with their customers to create their new products. So customer relationships is just a much more complicated issue. But it's also a sign, again, of positive investment for growth rather than defending against risks and uncertainties. It's a good sign.
Right, and that's quite interesting. So, last question: if I were to ask you for a more broader overview, the next year, are people looking at it with unbridled optimism, cautious optimism? What's it?
I'd say cautious optimism. I think it depends which part of the world. I think in the U.S. The growth, I'd say optimism is rising. I think it was cautious a year ago. I think it's a little bit less cautious now, although I wouldn't call it unbridled. We think that the U.S. economy will grow at about 3.5% this coming year. That's a bit faster than it was last year, and faster than expectations. Europe is growing very slowly, but that's much better than what we thought a year ago. Where the European Union, we think, contracted by 0.5% last year. This year we think it'll grow by 1 or 1.5%. The developing markets' growth is slowing down, but that is to be expected. That's what happens in economic cycles, and that's what happens to developing markets. So I would say that fundamentally, looking across the board, we think the overall growth rate around the world is going to go up a bit. We think people are cautiously optimistic, is how I would characterize it. And but of course, as we started the conversation, there are lots of uncertainties and lots of volatility, and that, as someone once said, that's why they call it work. So,
John Spector, thank you very much for speaking with us.